My name's Melissa Avara, and I love being a realtor. I specialize in real estate in the DFW and surrounding areas, and I also grew up here, so I'm very familiar with the Metroplex. Buying or selling a home can be an extremely stressful task, so I really try to go the extra mile to take that stress out of my clients' hands.
This is Going the Extra Mile. Now, from Frito Nation Productions in the Caddo Office Reimagined Studios, here's Melissa.
Hey everybody, Melissa Avara here. Happy to be here in the studio again with Erik Tomlinson with Supreme Lending. He is my preferred lender. Hey Erik.
How you doing?
I'm awesome. I'm happy you're here. You know, things just keep changing pretty rapidly here in our market. So, you know, something that he and I are both big on is really just educating you and all the consumers out there on what timing of the market and really what the ins and outs are of going on. So that's what we're going to talk to you a little bit about today. You know, so Erik, I'm getting a lot of people, a lot of my buyers right now have kind of hit the pause button. And not all of them, but I think most of them, what I'm hearing is they're scared. Mm-hmm. You know, like what is going to happen? You know, we have a recession, we're entering a recession or this, that, and the other. Rates are going up. This can't be a great time to buy. And me personally, I look at it the opposite way. I think now, and I'm an investor myself, I think now is a great time to buy. And the reason I say that is because summer is winding down. There's less competition. Homes now are sitting on the market a decent amount longer than they were just a month or two ago. And that's not necessarily a bad thing, guys. Like, we've been so conditioned the last few years that homes have sold day one with 40 offers. You know, that's not normal. I mean, a normal market in different areas could be, you know, 60 to 120 days on market. Yeah. And you might have to go through price reduction once. You know, that's not uncommon. But let's just kind of dive in and talk about, like, the Fed just had a meeting yesterday, like the conversations you're getting with clients. My approach and what I'm telling people, you need a house, you need a place to live. Marry the house, date the interest rate, because those are going to change. We've both been in this industry long enough to see all the swings. Yeah. So touch on, you know, some of the questions you're getting.
So, well, just to address the fear, you just have to overcome the fear. Don't be fearful of it. A lot of times these buyers, they'll say that they'll wait until the rates go down, which is fine. You could wait and the rates do go down, but I promise you the value of the house will still be higher. Even though we're going through this, you know, this phase. Think about the last time we were in so much fear in the market. It was probably when the market crashed, like 08, 09. Around that time, there were a lot of foreclosures, and no one wanted to invest because the values were going down. This is different. Jerome Powell basically said that, you know, we're not in a recession right now. Even though that we're seeing all these rates go up, and that strikes fear. And so some of the inflation will pause, but it's clearly not down to 2%. And so we're not there yet. And so the rates will go up. I think the rates are going to go up again this year. So buying now is still going to be lower than what you're going to be at maybe by the end of the year. But real estate, in my opinion, it's undefeated. I wish I would have invested back when there was so much fear in the market like there is now. I would have been so much better. I mean, with you, when I bought my house, I was in fear, and we weren't even going through a recession, and I put you through the ringer. I'm sorry for that. But I get it. So I understand from the buyers that I talk to, because I've been there. And in time, though, the value will go up. So I'll give you a scenario I gave to a guy recently. He said he was going to wait, and I said, okay, that's fine. I just want to let you know that you can afford now, and the mortgage is not much different from your rent. But I'll give you an example. Today, the rate might be in the mid-5s, and you're buying a house for $400,000. I promise 2 or 3 years from now, that house will be worth $450 to $500, the way things are going in Dallas, at least. Dallas is kind of the exception to what's going on in the U.S. right now.
Agree.
Because people are moving here. There's companies moving here. There's no state income tax. It's just not the same as every other state. So I think the values are going to hold here. I really do. I don't think they'll go down. They may pause, but I don't think they're going down. And so if you were to take I don't know, a rate in the fours, maybe a 1% less rate. Sounds great. Over 30 years, you save a ton of money, but you're buying a house for more. So the note is higher. My suggestion is you can buy now, and if the rates go down 3 years from now, 5 years, just refinance, and you'll have a lower note with the lower rate.
Exactly.
Okay, and and you'll have the house. I mean, if the rates go down again, it could get really competitive. And so who knows?
I think what everybody needs to remember here is the last couple of years has not been normal. Right. COVID, spiked a ton of people wanting to lock down a home. Rates have been low. Rates have been low for a long time. But you have to remember, like in the 80s and even early 90s, I mean, interest rates were in the teens.
Yeah.
For sure. Like I found a thing that I threw out there on social media today. It was showing like 1985, interest rates 13%. And people were still buying then.
Yeah.
So things just change. And the thing is, there's one common denominator here is people always need a place to live. Mm-hmm. And regardless of the times or, what people have going on, if they're transferring for a job, they're going through a divorce, whatever it is, you're going to need to buy and sell. So
I'm this close to telling some of the clients that buy in DFW, if you buy it and you don't think it's right, I'll buy it back for what you paid for it.
Seriously.
I really would, because I can't find it. Yeah, I mean, it's hard to find stuff off market. So I'm this close to doing that for people in the DFW area because I would do it. It's worth it. It's a smart investment. I keep thinking of, I was watching Shark Tank last night, and it was, Mr. Wonderful. He's like, when you pay rent, it's like you're throwing your money out to die. Yeah. And if I don't have to throw my money out to die, I'm not going to. I'd rather not waste it on trying to invest in like crypto where I'm terrible. I don't know anything and I just lose money. I'd rather put it in real estate. Real estate I'm telling you, real estate.
It's the surest investment.
Yeah.
Long term.
Yeah.
And I mean, values here have just skyrocketed the last couple of years. Yeah. So I think, what we're seeing right now is something that needs to happen here. We need a market correction. We're overdue. And it's not tanking, guys. It's not bottoming out and leveling out like all the crap you hear on the news. I mean, don't watch it. I don't watch it. And there's reason for that because they try to pump you full of fear. And, but again, what Eric is saying is if you're in the market and you wait 6 months from today, it's going to cost you more because home values aren't going to continue to appreciate like they have the last 2 years because those numbers have been insane. But what is going to happen is they're going to start to finally balance out. And to me, balancing out, that's the perfect phrase to me of what is happening in our market here in Dallas, right? There's, of course, other parts of the country that it's maybe going further and it might be going in the hole, but not here. We just have too many people coming here. I do a lot of relocation and I talk to a lot of people who, again, they want to rent for a year or so until they figure out the area. And for some people, that makes sense. But I had a phone call yesterday from a client of mine, young guy, looking to rent. And he's like, Melissa, oh my gosh, my apartment, he has 2 roommates. And I think he said they were paying like $2,700 something now for an apartment. And I'm like, do you live in like the Mac Daddy of apartments? And he's, no, he's like, it's not even nice. And they're trying to raise their rent $800 a month, $3,500 for an apartment. I said, my mortgage isn't even close to that. Like,
that's the thing about renting. It is comfortable for a year and then it's like an adjustable rate. It's going to go up more than likely.
For sure.
So again, if you can find a place where those roommates can pay you rent, it will pay so much more in dividends because they're paying down your principal on the note that you owe. Yeah.
And I think that was I had a great conversation with them because, again, like young 20s, a lot of these people, they're just getting started. The thought of buying scares them or like, hey, I'm single. I live with some dudes. I don't want to commit to buying a house. But after I talked to him, he's like, I'd love to be able to buy a house. I'm going to work to get myself into that position because even though, it might just be for a year or two, one, I know I could sell it, but 2, I could hold on to it and rent it. That's the message I try to convey to people. Like, it's such a time, like just one of the surest investments, in my opinion, you can make. And that's not just because I'm in the industry. You know, you can throw your money at a bunch of different things and lose it. But most of the time in real estate, if you hold it long enough, it is going to appreciate.
Yeah.
You know, and again,
I think it should be a prerequisite in college. I think math of money with real estate is,
amen.
you know, I mean, you figure out, you know, what are you doing with your money? I mean, if you're not changing your spending habits by paying a mortgage, because if you don't pay the mortgage, you're going to pay rent.
I mean, let's put this out there. So for all of you guys renting out there, if you're paying more than say $2,000 a month or like $2,200 a month, I assure you I could get you in a house.
Yeah, absolutely.
For that or less, depending on how much you can afford to put down.
Or if you have roommates and the mortgage is higher, they'll pay the difference.
And that's what you did.
Right. That's exactly why I did it. Yeah, because I was renting, I had a roommate, and I did one flip property that sold in a day, and I'm like, that wasn't the commitment. That was easy. So my thing is like, look, if I'm afraid if something bad starts happening, if I realize I don't like the house or the location or whatever, I can sell it for what I bought it for, or in this case more. And the house that you helped me get, it was less than 5 years ago. The value's gone up over $200,000. I couldn't get a return on investment on any other stock. Yeah. You know, it's insane. I never saw that coming. And again, if I was in like a recent college grad, or if I'm, moving around every year, which was what I was doing for apartments, just constantly moving, it was terrible. If I would have known more just about the purchasing and what I can afford, if I would have known that I could afford a house for what I was paying, I would have just done that. I was paying like $1,400 in Uptown in a tiny apartment. I could, spend $2,000, maybe a few $100 extra, which I was putting in a 401k that was losing money, towards a house that will, through time gain value.
Right, and then you rent out a room and you have somebody else paying your mortgage.
Right.
Boom.
Yeah, that's right.
I mean, were there any specific fears just straight up that you had about buying that you kind of had to get over?
So I think I didn't want to buy a house because I didn't want the commitment, and that was really it. Or I didn't think that if something broke, I wouldn't know how to fix it, but or had the money to do it. But this is why you buy a house with a warranty, or you have good homeowners insurance, or you have a roommate if times get tough. Because there's people that would rather live in a house where they don't have to take the stairs or an elevator, or they have a backyard. It's worth it. People that say, I'd rather live in something really nice, that's fine. But I promise you, if you just test out a 6-month deal at a house, if you're with people that you love and you have a good community, then it'll supersede all those nice views you have for like a few months or a year.
Yeah.
I just got tired of rent going up. It was an adjustable rate. I mean, when I look back at it, whereas you have a mortgage and you have a tax write-offs. And if times got tough, I could always just rent it out to cover my mortgage, even if I couldn't sell it, which tell me a house you can't sell in DFW right now. Right. I'll be surprised. And so it's easier to buy now. I do these loans where I cover the down payment. Maybe I was like, I don't know if I have enough money for the down payment. Well, guess what? The government has put aside all these bond options where the lender, I can cover your down payment. So that's out of the equation. And the mortgage payment, again, is within your budget. You might as well just own. You'll just feel different once you do it. And I don't know how to, it's hard to explain until someone actually does it. So
makes you feel like you put your big boy pants on.
Right. Ooh, yeah. But you'll see people turn the corner and they're like, oh, I'll never rent again. Or I didn't think I'd like this house, but now I absolutely love it, And, and that I hear that so much.
And I think the other thing to think of too, and I mean, when I bought my first house, I was not in real estate. So, I looked at several, and of course I wanted to like fall in love with the house and it'd be perfect and all these things. And, for buyers, I do say, I'm not in the industry to try to sell you a house and just make money. I want it to be a right investment for you. So if I see things or I think it's in an area where it's not a good return on your money, I'm 100% going to tell you, let's skip it. Let's look at something else. But I mean, don't be afraid. Take the fear out of it. I mean, sure.
See a therapist.
Home ownership, there's always things, like that you're going to have to maintain, or, something's going to go out. That's why you have a savings account with money set aside for stuff like that. Or like Eric said, especially for first-time home buyers, you can buy like a home warranty for $500-$600 a year. And if your AC unit goes out, you're not going to be out, 10 grand for a new one. You pay the $50 to have them. And and not just first-time buyers, could be people strapped for cash, or that to me takes a lot of the fear out of it, because you're responsible, but you're not on the hook for some really big ticket item that you're not going to be able to afford or don't want to finance. So, just if you're in the market to buy, I highly would recommend not waiting. Again, just because it's going to cost you more. Like we said earlier, date the interest rate, because I think over the next year they're going to fluctuate quite a bit. I mean, yesterday they just went up, 0.75? Is that right?
Yep, they had it. Yep. The Fed met yesterday. A lot of mortgage companies were ahead of the curve because they anticipated it, so they had inflated some of their rates. And then when that message came out, there was a lot of the market actually went green. A lot of people were buying in because I think that they're sold on the fact that it'll go up again. So now is a good time to buy. Even if the rates went up, they're going to go up again. So I don't want the rate to deter you. Just look at the payment and then look at the house itself. And if that works, then I promise it'll work in the end. If the rates ever go down, you can always just refinance. So it's I hate saying, if you wait, you could wait yourself out of a good deal. I mean, it's true.
It's the truth.
Yeah, because the house will go up in value. I mean, it should, at least in Dallas. I've never seen Dallas so congested. It's a little alarming, to be honest, how many people are moving here and how many companies are moving here. So I'm still very busy. I mean, maybe there aren't as many closings right now. I mean, I'm still, like, if you look at my January to today, my stuff is still at the same pace, but stuff that closes today as a result from applications like 4 months ago, especially with new builds. And with new builds, they're finally coming to, they're being built and the rates are higher. So some of these buyers are backing out, which is fine. So all that means is there's more inventory, and the new builders may give more concessions to get rid of that inventory. So that's another reason to buy, is because the builders are going to start bending now. They're going to start bending because they see the rates too, and they just can't hold that inventory forever as it sits there. So they're going to start unloading, and so that also means it's a good time to buy.
What's crazy to me is honestly like how quickly things have shifted, because 2.5 months ago, I had clients who all they wanted to look at was new construction. Everywhere I took them, it's a wait list scenario, like 300 to 500 people deep. So we're looking at least a year and a half. And they're like, we need a house before then. This is asinine, and now every single day I am getting blown up with emails, phone calls, investors, like text messages, you name it. Like, hey, we have 50 inventory homes. We're offering 20,000 towards closing costs if you do this or you do that. And I'm going, okay. Yeah. I have all these people who they want new construction. Now is the time.
So another thing too, so these other like second lien holders are starting to get creative and helping people afford the house. So I get a lot of people that make a lot of money. They just don't have a lot saved. Maybe they have student debt or whatever. I did one yesterday. Certified funding will do a second lien, and it's a 15-year note, but it's amortized for 30 years. Which means that in the interest rates, like in the 5s. So I have a first lien and a second lien to avoid a jumbo loan. Jumbo loans are a little bit different. The guidelines are a little bit more strict. So you could technically buy $1 million house and do a conventional loan. You just split it up into 2 loans, and you only have a 5% down payment. And they'll give you a 15-year note, and it's amortized for 30 years, and the rates are basically the same. It just balloons after the 15 years. So what happens is you either pay that balance off after 15, or you just refinance them together. But it'll help you afford more house in an inflated market. So like 5 years ago, a $600,000 house today is probably worth maybe $1 million.
Oh, for sure.
$1 million, and they're like, I can't do 20% down on a regular jumbo deal or 10% down. Well, I'll give you a jumbo deal for 5% down. I'll just split up that first and second lien to 2 choppy loans and help you get in. And certified funding is just an example of one. There's several others, but they don't like go out and market that. You're not going to hear that on the radio every day. You're not going to see it on TV and commercials. You really got to get with a lender that has experience with all these second lien outlets to help cover that down payment. So in an inflated market, there's still options to buy, and it's still affordable. And I say, again, we're in the 5s today. If you can get a second lien in the 5% range, it's great, because second lien holders are generally much higher in rate because they're more risky. If the house gets foreclosed on, they're second in line to get paid, and they don't like that because they may lose all their money, which I'm not saying there's going to be foreclosures coming up, but if we're not in a recession right now, but later down the year, we find out people are being laid off because it's too expensive to run businesses. If there is that and people are like, I need to get out of my house, I don't think that mortgage companies are going to avoid foreclosure anymore. Because back in 2008, we learned that was a bad thing to foreclose. And so they would just modify loans if you had a qualifying hardship. I don't know if they'll do that anymore because the banks know they can make their money back if they foreclose.
Yep.
Back then, if they foreclosed, they were losing money. Now they may make money. So there could be some foreclosures coming on the market, whether good or bad. It could happen. My first flip came in a situation where there was this guy, he owned this house and he was collecting rent, but he was never paying his mortgage. By the time he got his letters and he realized that the mortgage company was going to foreclose, he called his realtor and said, "Hey, help me sell this house." He's like, "I have a week." And the realtor's like, "That's not enough time to get financing. You have to get a cash deal." Cash deals are generally cheaper. And so that's how we were able to get in. And so there might be opportunities like that coming up. So I'd be on the lookout for that too.
Yeah. So, I mean, if you're an investor, I said, I work with a lot of investors, and to me, if you can pay cash for a house, like, good grief, do it now. Do it now, because things just, I mean, there's not just fear from the consumer standpoint, but, I talk to a lot of other professionals. I talk to a lot of other realtors every day, lenders, and it's crazy to me when I talk to some of these other people how much they say they notice the market change, like their business has just completely stopped or really slowed down, and they're scared. Or it's funny because like some of these realtors who've just gotten in the business in the last year or two, they've never really had to work too hard, right? Because their listings are selling in a day, right? Nobody's had to do the price reductions and like market something, and the script has flipped. I mean, now people are having to hustle to get it done. So
we, Supreme Lending, we own our vendor for appraisals, and we want to compete with those cash deals. So they have a panel of approved appraisers on there, and there was like 10 in DFW that committed to getting us, Supreme, an appraisal back within 5 to 7 business days, which helps us compete with those cash deals. So you don't have to be a cash buyer either if you're going to be an investor. You can pocket some of that money and borrow. It's still in the 5s. I can get that done pretty quick. So that was helpful as well to compete, because lenders, the stigma like with a bank, or they take too long to close. So one of our advantages is that we can, especially in DFW, we can close quick because we get the appraisal back quick, which also helps the buyer get over the fear that if they have, a 7 to 10 day option period, I can find out what the value is before the option period is over.
Absolutely.
And if you have to back out, you only lose the option money, not the earnest money, which could be thousands.
That's a huge deal.
Yeah. So there's, there is that too. I mean, like if you want to compete and you're taking too long, just make the offer, and in the option period, we'll figure out what the home is really worth, because in this market, you never know, because so much stuff is either selling or not. The values can change quick.
Yep. No doubt.
Yeah.
So guys, I guess we'll wrap it up. And it's like, if you're in the market to buy or sell or invest, give us a call. Don't let the fear overtake you. Don't listen to all the naysayers on, news and social media. We will take great care of you and help you secure a great loan at an affordable rate and get you in an awesome house.
Definitely.
Thanks again for being here and for the update, man.
Thanks for having me. It's a blast.
If you have questions about buying, selling, renting, or investing, don't go at it alone. Reach out to Melissa at 214-280-4317 or Melissa at melissamovesdfw.com. You can find out more about the Melissa Avara Realty Group at TVG by visiting melissamovesdfw.com. Thank you for listening to Going the Extra Mile.